Hi traders, thanks for stopping by thetradinganalyst.com. This is Taylor, and we're going to take a look at a day trade that I took today and alerted to members. And this is not something that most people do, but I'm going to go over a losing trade. And the hope here is that you learn something from this video on how to risk control, among other things, and we're going to get into that, and you're going to learn how to take a good loss, because there are good losses that you take. That's actually your number one job as a profitable trader, is to take small losses. So before we get to that video, visit us on the home page of the website and get to know us a little bit better. If you like these free videos and analysis and these trade reviews that we give to you on a daily basis, it's nothing in comparison to the membership you get at thetradinganalyst.com. Once you sign up with your free 7-day trial, you're going to get instant access to the smart trading like the one that I'm about to show you right now. And you're going to see exactly why we get such great reviews from our current members. Once you do that, you can scroll down here and you can choose whichever membership option suits your needs the most. Alright, so let's get into this losing trade and how you can learn from it. So we got into, well, first of all, let me explain the setup. So this is Gilead. This is the 15-minute chart, so each candlestick represents 15 minutes of trading. So this is the first candle of the day, and you can see it opened with some pretty decent volume. There was some pretty decent closing volume from the day before on the last candle. So we had two candles with some pretty decent volume right here. Bullish opening candle. We're above the 10 period and 20 period simple moving average right here on the 15-minute chart, and the long signal was right here. I don't get into the exact strategy, that is for members only, but we got long right here on this candle right here on the retrace right here. So we got long right around 69.40. All right, 69.40 is right where we got long with some weekly calls, and I'm going to show you that alert right here. So some weekly calls were alerted at the $69.50 weekly call strikes at 62 cents, and these are alerted via text message as well. So for all of our members who are not in front of the computer screen all day long, which is totally understandable, most people aren't, you get that alert via text message as well in real time. So we alerted those at 62 cents right here, and our target was about $70. That was the first target, so we were going to sell half at $70, and you can see that I said that right here, looking to sell half of these weekly calls around $70 on GILD. Alright, so that was the plan, and the rest we just let ride until the trend breaks. Alright, so that's kind of the plan, because you never know how high it's going to go, and if you don't hang on to some contracts, you're not going to be able to get that full big move that you're supposed to get on the winners. You want to keep the winners big, and you want to keep the losers small, like we did on Gilead today. So that was the plan on Gilead. So it was looking nice. It was looking nice up until this point, and then we just kind of puttered down here. We were still in this trade, and then our stop was a break of the 20 period simple moving average, and that was on this candle right here, a close below that 20 period simple moving average, which is the red line right here. We did so on that candle right here, and we alerted that for a very small loss right here at 57 cents, and that's about an 8% loss. And if you're trading stocks as a long-term investor, maybe that's a big loss for you. But here at the Trading Analyst, we're trading weekly options, and an 8% loss is nothing because our potential gains are a lot more, and our actual gains are a lot more. Last week we had 400% winner, we had 120% winner, we had a 50% winner. So those are the types of gains that we normally get. So on this one in particular, and I'm going to go over the risk-reward ratio because this is another important piece of trading profitably on a losing trade. So the first target to sell half of our contracts at $70 would have put that trade at a 50% win. So we were risking, let's just call it an even 10% loss to gain 50%. And that was just the first target. So if it went higher, we could be looking at 100% gain. You never know. So just to make it simple, a 10% loss versus a 50% gain. So that's a 5-to-1 risk-reward ratio, and that's great. That is a great risk-reward ratio because you can lose a lot more than you win and still end up being profitable. And the great thing is that here at the Trading Analyst, our method works much more than 50% of the time. It actually works about 60% of the time. So we do quite well, and this is just one example of us keeping our losses small. So that's what you want to do as a trader. You want to keep those losses small, and you want to keep those winners big. And the biggest problem that a lot of traders have is they don't let their winners run. As soon as they see some green, they try to sell. They like to ring that cash register. It's just natural human nature. But if I could give you one piece of advice, I would throw some moving averages in there. I'm not a big proponent of using them as support and resistance, but what they're great for is using them as trailing stops. All right. So if a stock just keeps going up and up and up, you want to stay in that stock. You want to stay in that stock. The trend is still intact if it's above. I like to use the 10-period simple moving average, but you can use whatever you want. 10-period and 20-period. You could use a tighter one as a 8-period or a 5-period. It's really up to you. But what it's going to do is it's going to allow you to stay in those moves that end up moving up big for a long time, and you're going to catch the meat of the move, and you're going to be able to extend your gains well beyond your losses. Alright guys, so that is it for the video. Thank you for stopping by. I really hope that you learned something from that. Again, we do not win every trade. This is not a get-rich-quick type of situation here at the Trading Analyst. We just win more often than we lose, and we build wealth over time by using consistent and conservative strategies. Once you sign up with your free 7-day trial, you're going to get instant access to trades just like this one, and better yet, on the winning trades as well. It's a great opportunity, and we'd love to help you with your trading.